I'm not sure whether you have had the privilege of being informed that you can purchase all shares in the NSE. It may be just 1,000 bob, 2,000 bob, 5,000 bob. You can also be able to buy shares without getting engaged with the stock market directly, without even having to open a CDSC account, without even having to know any broker. So that is the kind of conversation I want us to have in this video. In case you are coming across this channel for the first time, welcome to Finance Focus with Andrew. We limit ourselves to conversation that ensure that we continue enhancing our financial literacy skills. Don't forget to subscribe, like, share, and comment. Now, I want us to talk about equity funds. Maybe you have heard about equity funds before, but you don't really understand what they are. So, we are going to understand what are equity funds and how they function by answering these 6 simple questions. And we go directly to question number 1. And question number 1 asks, what are equity funds? And equity funds can simply be defined as equity funds are part of the many unit trusts that we have. You know, a unit trust is an umbrella of so many products, but money market funds happens to be the most famous among that family of unit trust. So equity funds are brothers to the money market funds, but this is the difference between equity funds and money market funds. The funds that is collected by money market funds is invested in low risk investments, but the money collected by equity funds it is invested in the stock market. So equity funds are therefore a collective scheme where money collected is used to buy stocks in the stock exchange, and the investors get return in terms of capital growth and in terms of dividends. So the money is collected by a fund manager, and they use all the funds to invest in the stock market. We have answered the question number 1. Number 2, why invest in equity funds? We know we have a lot of funds under the umbrella of unit trust, but why do you consider investing in equity funds? Number 1, it's to get diversification, and diversification is simply saying don't put all your eggs in a single basket. Maybe you have invested somewhere else, and you would like to diversify your investment. And stock market is one of the way that you can use to diversify your investment. So you can purchase equity funds or you can invest in equity funds as a diversification strategy to ensure that you have some of your wealth preserved through the stocks. Number 2, professional management. Majority of us who invest direct in the stock exchange market, majorly we do it on guesswork. Allow me to say that we do it on guesswork and anticipation from maybe some information that we have had. But in equity funds, decisions are made by professionals. So it means that there is professional management in the purchase and sale of the stocks that are involved. It will not be guesswork as majority of us do it. So you'll be able to be engaged in the stock market with the guidance of a professional. Like your funds will be managed by a professional. The fund manager will always employ a professional to do the investing in the stock market. The other thing is accessibility. You can access them with low as 1,000 shillings, 2,000 shillings, 3,000 shillings to give you flexibility compared to other product, like maybe the bonds, the special funds where you must have a lump sum of money to be able to access them. The number 1 is the other thing is growth potential. One of the things that can really create wealth over time, but underline the word over time or over a long period of time, it's stocks. So investing in equity funds can help you grow your wealth, even though it will take quite some time. But there is potential of growth in equity funds. So those are the reasons as to why you can consider investing in equity funds. Let's go to number 3, and I hope you are getting value from this video. If you have gotten any value from this video, ensure that you like, leave a comment, and if you are not a subscriber, make sure you do so at this point. Yes, just subscribe. Number 3, what are the risks that you need to know before you get to invest in equity funds? Now, even though we are saying that there is potential for growth, every investment comes with its own kind of risk. And one of the common risk in equity funds, it is the market risk. Market risk is the risk that you can buy a share and the stock price gets to go down. It means you get to lose. That is the biggest risk that is faced by the equity funds. And the other risk the other risk, or something that you need to know about equity funds, there is no guaranteed returns. You know, if you go to a fixed account that is offered by your commercial bank, even if they will give you little returns, maybe if they tell you that we will fix your money for 1 year at a rate of 5%, that 5% is guaranteed. Whether there are floods, whether there is drought, the bank will give you the 5% that you agreed. There is no guaranteed returns in equity funds because it all depends with the movement of the stock prices of the stocks in which the fund managers invested your money. So there is no guaranteed returns in this, and that is why we will see the class of people that can consider investing in equity funds. Some of the examples of the equity funds that we have a lot of them. You can do your homework, you can do your assignment by doing a research online, but you will meet majority of the fund managers as equity funds, including CIC, ICA, Mutual, Britam, a lot of them. You can just go and check companies that offer equity funds in Kenya. There are quite a number of them. Our question number 5, we are almost concluding. Now, this is a very important point. This is a very, very, very important point. Who should invest in equity funds? So before we answer this, if you have any question about the parts that we have already covered, it's your time to ask that question in the comment section to ensure that we address it, because we are almost finishing. So if there is something that is not still clear to you, ensure that you ask it. Now, who should invest in equity funds? A very critical question, a very critical point. Number 1, people who want some long-term growth. Don't take your emergency funds into equity funds. We have said that equity fund is an equivalent of stock market, and we know that you cannot get to the stock market for a short-term basis. So don't take your emergency fund into equity funds. You will lose. Don't take your kid next term school fees and invest it in equity funds. It will not favor you. So you should get to equity funds with some long-term intentions, with money that you wish to invest for a long term. So don't try getting into equity funds with money that is only available for a short term. Number 2, it is people who are comfortable with some level of risk. We have said that it is the stock market, and this is a risky venture, and there is no guaranteed returns. So you should only get to equity funds if you can accommodate some level of risk. So if you are conservative when it comes to risk, equity funds is not your place. The other thing is people who wish to invest in shares, but they don't know the know-how of picking the shares on themselves. So maybe you have this desire of investing in the NSE, but you don't really know how to go about it, or you don't want to take the risk of picking the shares. I will buy this on yourself. So you can use the way of equity funds to get into the stock market. Now, how do you get to invest in equity funds? This is the last bit. It's simple. Get to the internet and do your research on firms that offer equity funds. Compare their performances. Decide on one that you see it is best, that is maybe based on performance, based on their reputation. Get to contact them, open an account, deposit your money, and keep monitoring your statements. So that is what we call equity funds. We will continue to discuss other products under the unit trust so that we don't get to overpraise MMFs for so long. We need to understand all the product and the different categories of people that may be favored by the different products. In case you have any question or any other topic that you might want us to engage and discuss in, leave it on the comment section. I'll be following. Thank you.